What if the current sell-off in healthcare isn't a warning sign, but a clear opportunity? Hey everyone, welcome back. Today, we're talking healthcare, one of the most defensive, future-proof sectors out there. With aging populations and rising chronic diseases, healthcare companies have secular tailwinds that can fuel decades of growth. All evidence suggests healthcare is too strong to stay down forever. Let's dive into why these names matter, what's pressuring them, and if now is an ideal entry point for long-term investors. Welcome to the Investment Diary. This isn't just theory. This is my diary. And today, I'm giving you the exact, no-fluff, top 5 undervalued healthcare stocks to buy. For viewers who are in a rush, I will not hold you hostage. Here are the 5 companies: UnitedHealth Group, Eli Lilly, Novo Nordisk, Merck, and Johnson & Johnson that I believe are buy now. Each has strong recent financials, wide moats, and promising long-term catalysts. We'll cover their businesses, recent year's earnings, key metrics, revenue, margins, cash flow, competitive advantages, valuations, and why any short-term market weakness might be a buying opportunity for long-term investors. Let's dive in. UnitedHealth Group. UnitedHealth Group is the largest U.S. health insurer and a diversified healthcare company. It sells insurance products under the United Healthcare brand and provides technology-driven care services via Optum. In other words, UNH combines a massive insurance network with data-driven medical services. It currently serves over 152 million people and is projecting around $400 billion in revenue for 2024, a scale few companies can match. 2023 financials. Revenue was $371.6 billion, up around 15% year over year. Operating income was about $32.4 billion, and operating cash flow was $29.1 billion, roughly 1.3 times net income. UNH's integrated model drives healthy margins and lots of cash. Moat. UNH's moat comes from its enormous scale and network. It's one of the few players that is both an insurer and a care provider. For example, its Optum segment delivers care with advanced data and tech. Serving around 152 million people across healthcare plans and services makes it very hard for competitors to match its reach. Valuation. UNH trades in the mid to high teens on forward PE, roughly about 13 to 14 times forward earnings. Its PEG is below 1, reflecting strong growth expectations. This is reasonable given its growth and cash generation. Tailwinds. Demographics are on UNH's side. As Goldman Sachs notes, the number of people over 65 is set to double by 2050. In the U.S. today, seniors, 65 plus, account for 36% of all healthcare spending despite being just 18% of the population. That means demand for insurance and care is only going to rise. UNH's broad platform is well positioned to benefit from rising healthcare utilization. Opportunity. Healthcare stocks often lag during market rallies, but that can be a chance to buy. UnitedHealth stock has pulled back at times, for example, due to short-term earnings guidance issues, but its long-term fundamentals remain intact. If you can buy UNH on dips, you're getting a high-quality business with dividends at a fair price. In summary, UnitedHealth's dominant market position and strong 2023 results make it a core healthcare holding for the long haul. Eli Lilly. Next up is Eli Lilly, a pure-play biopharma giant. Lilly has transformed itself in recent years with blockbuster drugs for diabetes, obesity, cancer, and more. Think of Mounjaro, tirzepatide for diabetes, obesity, its growing oncology portfolio, and upcoming launches in neuroscience and immunology. The company is lean and R&D focused, a classic medicine company. 2024 financials. Lilly expects about $45 billion in full-year revenue for 2024, up 32% from 2023. 2023 itself was huge growth driven by new drugs. The company's 2025 guidance is $58 to $61 billion, midpoint plus 32% growth over 2024. In Q4 2024 alone, revenue hit $13.5 billion, up 45% year over year. Lilly's gross margins are extremely high, about 81.9% in Q4 2023, reflecting the profitable nature of its patented drugs. Moat. Lilly's moat is its patented drug portfolio and pipeline. It has one of the strongest diabetes obesity franchises with novel GLP-1 and dual agonist drugs like Mounjaro and Zepbound. These products address huge, growing markets. Plus, Lilly's robust R&D can cycle new products like Alzheimer's agent donanemab into the pipeline. High margins and patent protection give it durable profitability. Valuation. Lilly trades at a premium PE, forward PE around 37 times as of mid-2025. Its PEG around 1.2. In other words, investors pay up for its growth. By traditional standards, it's expensive, but that reflects extraordinarily fast revenue growth. Tailwinds. Lilly's main tailwind is the global diabetes obesity epidemic. Just like UNH, Lilly benefits from aging and chronic disease trends. Demand for weight loss and diabetes drugs is surging. It also has pipeline candidates for many other conditions. Its success so far, like 32% plus growth in revenue, shows this. Opportunity. If Lilly's stock ever weakens, as it did briefly after some Q4 results, that can be a buying opportunity. Long-term, the tailwinds and pipeline should justify its lofty valuation. The key is patience. You're betting on continued blockbuster launches and growth. Overall, Eli Lilly is a high-growth pharma play. Its 2023-2024 numbers and strategic focus on breakthrough medicines make it a top healthcare holding for decades. Novo Nordisk. Novo Nordisk is another diabetes obesity powerhouse, in fact, one of the best. Based in Denmark, NVO is the global leader in diabetes care and a rising star in obesity treatment. Its GLP-1 drugs, like Ozempic and Wegovy, have seen explosive demand. 2023 financials. Novo Nordisk's 2023 sales were 232.3 billion DKK, or around 33 to 35 billion USD, a 36% increase year-over-year at constant exchange rates. Operating profit jumped 44% to 102.6 billion DKK, and net profit was 83.7 billion DKK, up 51%. Those are massive growth figures reflecting booming drug sales. Moat. NVO's moat is its dominance in its niche. It essentially owns the diabetes market and is now leading in obesity treatments. Few companies can match its brand and production capacity for insulin and GLP-1 drugs. As Macrotrends notes, Novo Nordisk is a global healthcare company and a leader in the worldwide diabetes market. Valuation. The stock trades at about 22 times PE. That's rich relative to most pharma, but it reflects its growth. Novo's PEG is quite low given how fast it's growing. Tailwinds. Novo Nordisk benefits from the same tailwinds as Lilly, skyrocketing rates of obesity and diabetes worldwide. It's also expanding into more countries and indications. The aging population means more diabetes and related conditions. Opportunity. Novo Nordisk stock soared in 2023 on drug hype and remains high, but if it ever takes a breather, it could be worth buying. The fundamentals, huge sales and profit growth, are very strong, so dips can be attractive entry points for long-term investors. In sum, Novo Nordisk is a high-margin, high-growth specialist. Its 2023 results and pipeline give it a durable lead in diabetes and obesity care, and it deserves a spot in any forever portfolio. Merck Co. Merck, known as MSD outside the US, is a blue-chip pharmaceutical company with one of the industry's strongest portfolios. Its flagship products are the cancer immunotherapy Keytruda and the HPV vaccine Gardasil. It also has products in infectious diseases, cardiovascular, and more. Altogether, Merck has more than 6 blockbuster drugs, a formidable portfolio. These have high margins. Merck's non-GAAP gross margin was around 77% in 2023 and drive consistent cash flow. Valuation. Merck's valuation is quite attractive. Its PE ratio is only about 10 times as of mid-2025, much lower than the market's. Its PEG is well below 1, reflecting 9 to 10% expected growth. In other words, investors aren't bidding it up as much despite its growth drivers. Tailwinds. Merck will ride strong industry tailwinds like rising cancer incidence and demand for vaccines. It's also advancing a rich pipeline, multiple phase 3 studies. Its recent approximately $11 billion investment spree, Prometheus and Imago acquisitions, shows it's building for future growth. Opportunity. In late 2022 and early 2023, Merck stock was volatile due to charges related to acquisitions. It has since stabilized. With current growth prospects and a low valuation, Merck could be a great long-term buy if you get a chance to pick it up cheaply. It's a classic steady grower plus value play. Merck's 2023 strong results and blockbusters, combined with a cheap valuation, make it a compelling hold for income and growth. Johnson & Johnson. Finally, Johnson & Johnson, the most diversified name on our list. J&J sells everything from pharmaceuticals, immunology, oncology, vaccines, to medical devices, surgical robotics, orthopedics.